Welcome back, dear viewers, to the much anticipated second part of Mastering the Stock Market. In our previous episode, we laid the groundwork exploring the fundamentals of the stock market and the importance of various strategies. But now we're about to uncover something truly remarkable, the secret that has the potential to transform your stock market success. So fasten your seatbelts and get ready for a journey that could change the course of your financial future forever. 6. Emotional control. Trading can be an emotional roller coaster. Maintaining emotional control is key to staying on course. Impact of emotions. Fear and greed can lead to impulsive trading decisions, such as panic selling during market downturns or chasing hot trends. Emotional trading can result in overtrading, deviating from a well-thought-out strategy, and taking excessive risks. Stay informed, but don't overanalyze. Keep up with market news but avoid overanalyzing or reacting impulsively to every piece of information. Embrace losses as part of trading. Understand that losses are inevitable in trading. Treat them as learning experiences rather than failures. Take breaks and manage stress. Take breaks from trading when needed to manage stress and regain emotional balance. 7. Building a trading plan. Now that we've covered various aspects, let's put it all together into a comprehensive trading plan. Set clear goals. Define your financial goals, risk tolerance, and time horizon for trading. Select trading style. Choose a trading style that suits your goals, for example, day trading, swing trading, long-term investing. Choose assets. Decide which financial instruments, stocks, forex, cryptocurrencies, you want to trade. Develop entry and exit strategies. Determine specific criteria for entering and exiting trades, including technical and fundamental indicators. Risk management. Establish position sizing rules and set stop loss and take profit levels to manage risk. Create a trading schedule. Define when and how often you'll trade, considering your time availability and market hours. Keep a trading journal. Maintain a record of your trades, emotions, and results to learn and adapt. Continuous learning. Stay updated with market developments and improve your trading skills. Review and adapt. Regularly assess the effectiveness of your plan and make adjustments as needed. Emotional discipline. Develop emotional discipline to stick to your plan and avoid impulsive decisions. Backtesting. Test your strategy using historical data to gauge its performance. Seek feedback. Consider getting input from experienced traders or mentors. 8. Choosing a broker. Your choice of a broker can significantly impact your trading experience. Let's discuss what to look for when selecting a broker. Fees and commissions. Compare trading fees, spreads, and commissions, as they directly affect your profitability. Look for brokers with competitive pricing that aligns with your trading style. Trading platforms. Evaluate the broker's trading platform for ease of use, reliability, and available features. Ensure it offers the tools and indicators you need for your preferred trading strategy. Customer support. Check the broker's customer support quality, including responsiveness and availability. Look for multiple contact channels, phone, email, live chat, and timely assistance. Regulation and security. Verify that the broker is regulated by a reputable financial authority to ensure they meet industry standards. Assess the broker's security measures, such as data encryption and fund protection. Asset selection. Ensure the broker offers a diverse range of assets, including stocks, forex, commodities, and cryptocurrencies, if relevant to your trading interests. Account types and minimum deposits. Determine if the broker offers account types that match your trading capital and goals. Be mindful of minimum deposit requirements. Research and analysis tools. Look for research resources, market analysis, and educational materials that can aid your trading decisions. Execution speed and order types. Assess the broker's execution speed and the variety of order types they support, for example, market orders, limit orders, stop orders. Leverage and margin. Understand the broker's leverage options and margin requirements, as they impact risk management. Reviews and reputation. Read reviews and seek recommendations from trusted sources to gauge the broker's reputation and track record. Demo accounts. Consider trying a broker's demo account to test their platform and services without risk. Terms and conditions. Read the broker's terms and conditions, including withdrawal policies, to avoid surprises. Choosing the right broker depends on your individual trading needs and preferences. Conduct thorough research and prioritize factors that align with your trading style and goals. 9. Continuous learning. The stock market is ever evolving. Successful traders never stop learning. Here's how you can stay updated and improve your skills. Books: The Intelligent Investor by Benjamin Graham. Market Wizards series by Jack D. Schwager. Technical Analysis of the Financial Markets by John J. Murphy. Courses: Coursera and edX offer courses on finance and trading from top universities. Udemy and Investopedia provide various online trading courses. Forums: Reddit's r/stock market and r/forex are popular for discussions. Forex Factory and Baby Pips have active trading forums. News sources: Bloomberg, Reuters, and CNBC provide real-time financial news. Financial Times and the Wall Street Journal offer in-depth analysis. 10. Conclusion and final advice. Well folks, we've covered a lot today, but remember, mastering the stock market is a journey. Remember and keep in mind: education is essential. Invest time in learning trading strategies, risk management and market analysis. Plan and discipline. Create a solid trading plan and stick to it. Discipline is critical to long-term success. Risk management. Protect your capital with appropriate risk management techniques such as stop-loss orders and diversification. Continuous improvement. Trading is a skill that can be improved over time. Keep learning and adapting. Emotional control. Emotions can lead to bad decisions. Practice emotional discipline to stay focused on your strategy. Start small. If you are new, start with a small trading account to gain experience without risking too much. Stay informed. Stay abreast of market news and developments that impact your holdings. Be patient. Trading can be challenging and losses are part of the journey. Be patient and persistent. Thank you for joining me today on this deep dive into mastering the stock market. If you found this video useful, don't forget to hit that like button, subscribe to our channel and turn on notifications for more valuable content. Also, feel free to share your thoughts or questions in the comments section below. I will do my best to answer your queries. Until next time, happy trading.